Let's take a look at the Q2 outlook for equities in conjunction with Trackstar, Investing Channel's proprietary technology that tracks and analyzes financial professional investment research. There is a growing level of institutional optimism around US equities, with a slowing but still growing economy forming the backdrop. A disappointing earnings season may have dampened forecasts somewhat, but a more dovish Federal Reserve has allayed immediate recessionary fears. Many investors believe that US stocks can still perform, with some expecting them to outperform US bonds and international developed market stocks. This preference for US equities is supported by options market data, which shows greater demand for puts in international developed markets than in the US, and better price momentum in the US and yield curve steepness. Despite the fact that one measure of the US yield curve inverted in March, it is worth remembering that yield curves in other developed markets are flattening faster than in the US market. Looking to emerging market stocks, economic reforms and policy stimulus are supportive, and improved consumption and economic activity from Chinese stimulus could help offset any trade-related weakness. Valuations are attractive for emerging market equities following the significant sell-off in 2018. Also, there has been a sharp rebound in earnings revisions, prompting attractive forward valuations. Fundamentally, the market is set to benefit from the Fed pausing its hiking cycle and the recent Chinese stimulus, though its effectiveness has been questioned. Looking to the technicals, let's start with the S&P 500. We've had 16 up weeks absent 2, which is a clear sign that buyers are coming into the market. The 200-period moving average has worked well as support and momentum is ticking higher, but not yet overbought. Price is back at record closing highs at 2,900, and the previous resistance area of 2,800 has now flipped and is providing support. Moving to the Russell 2000, we can see a false break of the 200-period moving average. There are a couple of doji-type candlesticks and the 50-period moving average, which indicate some uncertainty amongst buyers. There is also a potential head and shoulders formation, which, if it completes, would give a minimum upside target of 1,900, which would be a new closing high. Heading east, we come to China's SSE composite, where we can see a nice rounding bottom-type formation. There has been a close back above both longer-term moving averages, although there have only been 2 closes above for the move so far. Pickups in recent volume have translated into bull price action. The 2018 highs are in sight once the dark crow Japanese candlestick has been negated. Let's finish off with India's Nifty 50, which shows last September's highs now being tested. There are a couple of D3 candlesticks on the weekly showing uncertainty from buyers. Momentum, however, has started to move into overbought territory for the move. There is, however, no reason to assume that the resistance at these levels will not be broken.